Oh, we're ready to go. So hi, everyone. Thank you so much, Ariel, for joining us today, joining our panel discussion. Today, we're talking about the role of fintech in sustainable wealth growth. So let's start from the basics. So my first question to you is, what do we actually mean when we say fintech? What are the modern trends of the industry? So is it wealth management, investments, person-to-person payment, I don't know, bill splitting? So tell us more about that, please.
Absolutely. So fintech has been blowing up, and it's really just the blend of financial technology. So it's where we're having opportunities for technology to leverage our financial operations. It's with investments. It's being able to, at the table, be able to split a bill with somebody electronically when you don't have your card or anything. And
Very
I think
convenient.
very convenient. But I think that where there are some really great developments with fintech, I mean, technology is really powerful. It makes things very easy. Where I think we start to run into some trouble is where that ease is being a little bit taken advantage of by some of these large corporations in how financial behavior acts and works within the average Joe kind of person. So people want things, right? I mean, it's
For sure.
you get marketed to, especially now. We're getting marketed to 24/7. You can't go out of your house without getting blasted by an ad. You're in your home. It's on your phone. It's pretty constantly hitting you at all times. And now you don't even need cash. You don't need even to take out your card. You can just tap it. You can click a button. Oh, and the best part too is you don't even have to pay for it when you click a button. You can easily finance it for a couple small payments over time. So
yeah, for sure.
well, those advancements in fintech have the sense of ease. It makes this convenience that we're constantly chasing. How can it be easier? How can it be faster? How can it be more seamless? Also is leading to a lot of financial instability. And we're actually seeing this big shift where the number one reason people are in therapy right now is actually financial reasons. Financial stress, 70% of Americans are stressed about finances, and almost 60% are living paycheck to paycheck.
Oh, wow.
We're on a very negative path when you look into the financial future of individual Americans with non-housing debt out of control into the tens of trillions of dollars and climbing each and every year. And that's credit cards, that's student loans, that's the HELOCs, which a lot of times people are like, oh, it's our credit card debt just reached over $1 trillion. No, it didn't, because especially when interest rates are low, people are just taking out personal loans and they're leveraging their HELOCs to pay off credit card debt. It's one of the number one reasons for a cash out refinance, if you can ask almost any mortgage broker.
So wait, is it technology to blame? I just don't understand. With so many innovations and tools and platforms and apps, why is the situation getting worse?
It's making it just so easy to spend money. And that's what they're after. They want you to buy, and then they want you to pay interest. And so the advancements of so much of the fintech out there has been just really angled towards those two things, because you're making these big financial companies a lot of money. And even when you think about these different cash paying systems, it's not free. There's nothing in life that's for free. And if you think about the infrastructure that is cost to build, protect the security levels that need to be done, they're profiting off of this. So it's just like Warren Buffett's thing is, right, the debit card is the worst thing to happen to the middle-class American people, right? And to use a credit card, because you're then, as long as you can be responsible, you're getting the points off it. So while it's definitely made our lives convenient, and that's been fantastic when you're in a pinch or this or that, transferring money, when you're thinking about long-term financial health and the stability of our nation, the numbers are not looking good.
Yeah, I know it by myself. For example, when I have money or cash in my wallet, I see that they disappear, So when I just tap, I don't even realize how much I spend. And this is the trick here. It's terrible. But let's talk about innovations a little bit more. So if we talk about innovations, about technology development, so which tools or which innovations have contributed to the development and growth of fintech right now?
I mean, there's been so many. I think that the one, though, that we're working on currently, which is Helo, that is designed not only to be the cash management tool. It's not just a budgeting app, because there's a lot of budgeting apps are out there, and budgets are just diagnostic tools. They're just telling you where the leak in the boat is. I love how you call them. It is. It's where's the leak in the boat? It's telling you, is your blood pressure high? Is your blood pressure low? You're either over or under budget, and where are you spending your money? what we're doing is we're integrating the information of a behavioral psychologist with a virtual financial planner who's telling you when to do things and in what order and in what way. But what we're doing is our whole premise is building the discipline, automating financial discipline so that you can just make sure that you're on target to pay your bills on time, to save for the appropriate goals that you're looking to, and you don't have to think about it. It doesn't have to be hard because you're just going to get one discretionary card for all of your immediate spending, and it doesn't matter what you spend it on. Gas, groceries, and whatever the heck you get up to on the weekend. We don't care. And you don't have to sit down and put in one column, well, I spent $6 on personal care more than last month and $12 less in groceries. Like, no one's doing that. You're not coming home from work, making dinner, giving your kids a bath, and then sitting and going through every statement you've made. It's just not happening. So how can we take the necessity of financial management, financial discipline, and how can we put that into something that's automated, that's quick, that's easy, that's simple, and you pretty much can't screw it up. It's like bowling with the bumpers. You're going to hit some pins on the way down.
Yeah, that's for sure what we need right now for fintech solutions. But also talking about innovation, so what emerging technologies do you think can actually help us, and what technologies are booming right now in 2024? And especially, I wanted to ask you about AI because, for example, I strongly believe that AI has great potential in terms of healthcare, right? And there's going to be some great ideas and breakthroughs here. So what about fintech? Is AI a game changer here for fintech?
Absolutely. And we're actually very excited to be using AI in our platform. So ours is called Mike, which stands for Making Investment Knowledge Easier. And it's a really cool AI tool that you'll be able to access on our platform where you can ask it questions. Finance is it's emotional. I always say if it was just numbers if it's just numbers on a page, everyone would do great at it. But it is emotional. We have money messages we've heard. We have a perception of our own value in relation to how we are. It's about our sense of security, which goes right back to your little lizard brain. And are you protected or not? Can you survive? And then status and comparing yourselves to other people. So I think it's really important that when we were making this tool, we had to create a safe place for people to go to ask these quote unquote dumb questions that they feel stupid asking to a friend or coworker or anyone else. And they're not getting consistent, concise, or just good information off the internet in a way that's easy for them to understand. So creating it not only digestible so they can have a place to learn is important, but beyond that, we're kind of making it into your mom in the way that as you're going through the month spending your money, you're going to get notifications of saying, like, hi, Jane, it's the 17th of the month and you've spent 3/4 of your budget. You need to start bringing your lunch to work and stop buying burritos every day.
So we were thinking about financial independence when we were kids because, parents gave you only limited amount of money. So now we're going back to that. So actually adults need supervision as well here with their financials, right?
Absolutely. I mean, it's so important, and it's so funny when you have people, and the one analogy I always bring up is think back to when you graduated college.
Okay.
You just got out of the whole dorm life. You're in your cool apartment. You got your first job where you're making real money, probably in the low, mid 100,000s, 50.
Still happy about that.
50, 60, and you're like, I've made it. Like, I'm doing awesome. Yeah. I've got everything paid for here, there, the other thing. And, you balled out and you had a great life. You were happy with it. Then you get a promotion. And then you get a nicer apartment, and then you get a nicer car, and then you get caught up in this loop of pushing your lifestyle just continues to creep and creep and creep. This Insta-perfect messaging that we're getting, everything's on demand. So being able to rein that back in and just say, how about instead every time you get a bonus, blowing it on X, Y, and Z, we make sure that we're on track to do these other things first. And then reducing the amount of anxiety you have because you don't have to think about your credit card because it's taken care of. We're helping people to save so much money on interest. I mean, these financial institutions that are out there, they are making hand over fist. They're making billions of dollars on interest and loans and everything else, even just by simply changing the method of how frequently you're paying things like your mortgage, everything else. You're able to knock off payment periods. We're able to put in, for call it 250,000 users, we're able to bring back almost $550 billion into consumers' wallets based on our technology and what we're doing, and in a way that they won't be able to feel it. Think about then that on a larger scale. If we're able to hit 1, 2, 3% of the population, that's going to be trillions of dollars that are going back into people's wallets, into equity in their home, into improving their credit score, creating more opportunities, and that actually turns into strengthening our banking industry, because our banking industry is not going to be continuously sustainable when the default rates are going up, when the average loans are going up, and then people aren't taking into account for when they get hurt. I broke my neck. I was out of work for 8 months.
Yeah.
You never know what's going to
Life
happen to
happens.
you. Yeah. And you can't just, people are always relying on, oh, it'll be fine. This is going to happen. That's going to happen. This is going to come through. And sometimes it doesn't. So wouldn't it be just nice to know you have your own safety net there? And I think it's really important that as this technology grows, as things get faster and easier and this and that, there's just some core principles you need to have in place for yourself. You need to have an emergency fund.
Yeah, but basically going back to AI, so it does help you to make just things faster, more convenient, and easier. So this is the role of AI here.
And also the discipline. It's notifying you like, hey, this is what you're doing. Hey, you should be doing this. Hey, you should look into doing that. It's creating the bridge between what the patterns in your behavior, and also telling you what you don't know. Because people, you know what you know, but you don't know what you don't know.
Yeah, and this is the problem, I guess, here.
Yes. If, for instance, you buy a house, let's say you put in your thing, your goal is to buy a home, you say you want to buy it, and because of the way you put in the finances on the budgeting app, it knows that you can't afford your mortgage payment if something happened to your spouse. Their income you need that to pay it. It's going to tell you, guess what, you need insurance then. Because you don't have enough you haven't been able to self-fund through your own investments or emergency fund. You're dependent upon this other income, and you'll lose now what's probably one of the biggest assets on your balance sheet if something happens to your spouse.
Oh my God, so you ask difficult questions. It's like a little supervisor, that it goes, okay, look here, think about that, be careful, attention. Okay, but another question I wanted to ask you, so what are the main challenges and pain points of the industry itself, right? Fintech is complicated. So what do you think? What are your thoughts here?
I think security. I think security is going to definitely be one of the biggest pain points, as we've just seen what happened when AT&T went down. There's these exposure points. We were, just previously talking about security and what's going to happen as we get more dependent on technology. What happens when something happens to that technology? Somebody else was just joking the other day. We get invaded by whomever, and something happens to our technology. I don't think you're gonna be able to buy your groceries with Bitcoin. So,
no, exactly. You never know here.
Yeah, and I think it's just really important to think about: are the tools you're using secure? The safest way to hold assets, if you have an investment account, the safest way to hold those assets is with an investment company it's held in trust for the benefit of the client. So that's for our clients, that's how we hold all of at Nightingale Wealth Solutions, that's how we hold all of our clients' assets, and unless they decide otherwise, but it's with our investment firm, and then your IRA, your brokerage account, Roth, whatever we set up for you, it's held in trust for the benefit of, so that if anything happens to this firm, anything happens to here, you're getting your money. It's the safest way to hold assets in the United States. So I think it's asking those types of questions. What happens if, and somebody joked the other day, well, what happens if Merrill Lynch goes down? And somebody laughed, said, that won't happen. We're like, and you know how many other companies people have said that about?
Yeah, that's so true, so true. Okay, so this is number one problem, right? What about legislation? Is it like the main obstacle as well for the fintech growth?
I think that's going to go, I don't think that there's going to be as much challenge with that, just because you kind of gotta, the times are changing, and I think this legislation is going to change, and I think that especially as people turn over in office, we're getting younger people in, they understand not just the value, but they also understand the exposure that sometimes these things can open us up to. So, and then you've got, with the stable coin, for instance, you've got some of these big giants like PayPal, MasterCard going to bat, making sure that these things get pushed through. So, I think that there's going to be some adjustment as those things happen, but I don't see that as being a huge block to the industry as a whole. Times change, legislation gets updated. Our government is not designed to move quickly. It is meant to move slowly so that we cannot, so to kind of help us not screw it up as well.
Yeah, that's a good point. But okay, so that's great news anyways, right? And so wrapping up our conversation, so how can we, like people, like average Joe or businesses, how can we leverage all these financial tools and apps that exist right now? Just maybe some practical tips from you.
I think number one is make sure your passwords are updated. Make sure they are very secure.
And remembering them.
Yes, remember them. I can't say how important that is. The other one is
Passwords, okay.
Yeah, passwords is huge. And aggregation. If you need to know what's going out of your household every month, you need to know what's coming into your household every month, and you need to know your net worth. And then being able to plan those goals. If you don't have a direction you're going in, you're not gonna have good financial management, and you're gonna lose out on opportunities. And that opportunity cost compounds exorbitantly, especially over the lifetime of somebody.
Yeah.
So by you not knowing about a Roth, even something as simple as a Roth IRA, or how to buy a home, or doing this and that, you're sacrificing so much of your future and starting early. But I think it's find something that you like. Be consistent. So whatever tool it is that resonates with you, whether it's Hilo or anything else, find something you like, find something you trust, find something that resonates with you. And I think the most important thing is find out who's running it. Is your data getting sold? Are you getting pushed credit cards, and are you getting pushed loan offers and this and that through these tools? Or is this something that's actually built on the integrity of the fact that it's trying to improve your financial situation?
Okay, yeah, great. Okay, so aggregation, finding the right tool, make sure you keep track of everything. Sounds great. Okay, so Ariel, thank you so much, and thank you so much for Lively and Grid Daily for this amazing conversation. That was great.
Thank you.